In this video, I'm going to define what an intangible asset is. And then I'm going to go ahead and give you some examples of intangible assets that you might see on a balance sheet. But let's get started with the definition. So first off, an intangible asset does not physically exist. So this isn't something you can touch. This isn't a building or something like that, or a truck or some kind of vehicle. This is something more abstract. It does not exist in any physical sense. Now you might be thinking, well, hey, there are lots of assets that don't exist. What about accounts receivable? We can't touch that. Is that an intangible asset? And the answer is absolutely not, because of the second requirement to be an intangible asset, which is that something must not be a financial instrument. So that rules out accounts receivable, stock certificates. Any kind of financial instrument is not what we're talking about when we say an intangible asset. So if it's something that doesn't physically exist and it's not a financial instrument, then what kind of asset are we talking about here? Well, most intangibles, what they do is they grant certain rights and privileges to the person who holds them. So they grant rights and privileges. So let's talk about some examples here. So what are some assets that aren't financial instruments, but yet they grant rights and privileges to the people who hold them? Well, we've got copyrights on like an author's work, for example, or a musician. We also have a trademark is an intangible asset. For example, the Nike swoosh. Nobody can use that but Nike, so Nike has been granted a right to use that. That's an intangible asset. A patent is also an intangible asset. Some things that the firm can acquire from external sources, such as purchasing from another company, can also be intangible assets, such as a customer list. Now, all these things grant rights and privileges to the company, but there's a big intangible asset that really doesn't really fall into any of these categories that we're talking about here very neatly, and that's called goodwill. Goodwill is an intangible asset, and what goodwill is basically is when you acquire another company, goodwill is the excess of the purchase price, the amount of the purchase price that exceeds the net identifiable assets of the company that you're acquiring. And that's kind of complex, but we'll talk about that in another video. But just know for right now that goodwill is an intangible asset, just like copyrights, trademarks, patents, customer lists, and so forth, because these are things that do not physically exist. Physically exist. You can't touch them, but they're not financial instruments, yet they're assets. We call them intangible assets.